The stock market was really choppy this week, but I really hope that you did well. I don't know whether or not to call my trading this week my best week or my worst week. Uh, it was an interesting week to say the least. If this is your first time here, every week on Saturday I post a video going over all my trades for the week and talk about why I put them on or what I'm thinking about doing going forward, any revelations I make, that kind of stuff. So let's go ahead and jump right on into this. All right, so my daily close snapshots. The first day of the year, I had a really good day. Uh, my portfolio went up a lot, and you'll see why if you haven't been watching my videos. That's not the prettiest reason. Then the rest of the week, pretty flat. Thursday was pretty good. Wednesday was a little bad, but uh, go ahead and look at the progress report overview. It's nice that this fits on one big page so you can see everything. So on December 31st, my count was 178.30. So it was a little lower at close than when I made my video. So I did update that. So instead of being down $300, it's down $14.70. And this week I closed at 187, which is almost a $9,000 gain. And I got to bump my months until millionaire up a month or down a month. So that was pretty cool. Monthly realized income this week was kind of crazy. $11,000, so that's $21,000 in the last 2 months, making back the losses that I had at the back end of 2021. But I didn't do it in a good way. Looking at this week's trades, this is the first time that I had to break this up into 2 slides because I just had so many. And if you watched my video on Tesla I put on Tuesday, I put a pop-up up here if you want to learn about that. I'm not going to talk about my Tesla plays here because I already had a video done for that. But basically, on the 4th, I decided to close down a lot of my positions. I thought the market was going to be going down. Had a lot of bullish positions on, so I took those off. I also wanted to take a step back and kind of reset my thinking because I started noticing a bad pattern in my trading. That's no secret. I was kind of doing some crazy stuff with Tesla the last couple of weeks, and it's been working, which is even scarier because it's just encouraging me to do it some more. So a lot of these positions were just me taking stuff off to take off risk. So like AAL, Intel, these are just puts that I was buying to close, small gains to start with. Zoom, again, another one that's been moving down a bit. I could get out with a profit, so I decided, you know what, let's take that risk off. Even though I still think Zoom at 150 probably would have been fine, it would expire. I was just trying to reduce my notional risk, or notional value risk. Again, just going down the list, I was just closing stuff down, taking off risk on a lot of my bullish positions, even close out some leaps that I think were probably going to be fine. And I was transitioning to putting a lot of my money into like an income portfolio. And you can, if you watch that Tesla video, I also talk about that, I think, in that one. So down here, you can see that I bought a bunch of shares of Nusi, Jeppy, and QYLD. I think those would be my main 3 staples to start with. I also added Devo into the mix, and I may add other stuff, and to add those in, my contributions that would go towards my income part of my portfolio will just go into the positions that I want to add. So that'll change the weighting overall over time. Might be a little slow to get those up to the right weights, but they'll get there eventually. Palantir, I did decide to also take that off. So this was the stock repair strategy in play. I did make back $158 from the shares, but I did lose when I sold the shares. I also decided to close that position down. Overall, I realized a profit of $13,000 this week. There's also a page 2 here. So again, Snow, this was a bull play that wasn't one of my top 3 plays. The market just hasn't been good for it, and unfortunately, I think that's the first time that I've been massively wrong on a play that I put on the video. DocuSign, this position at one point was up over $1,500. I could have closed that for a profit. Instead, I closed it for a loss. So I got greedy, didn't go out when I just originally wanted to. I was like, this play can keep going up. No, it hit my price target and I didn't close it out. So make sure that when you put on a trade, have your trading plan and try to stick to it. going down. My PMCC closed out for a profit. This was a position I was tempted to just take assignment of the short shares to make a video showing how to manage when that happens. But my train of thought was transitioning to focus more on my portfolio instead of a video, so I did close on the position for a profit. Because when my short strike gets breached, I'd like to close on my PMCC for a profit. Anything else big in here? I talked about SPY in the video. Those are some quick day trades that came out pretty good, taking advantage of like high theta at 0 DTE, but also there's massive Vega exposure, which is just risky stuff. Like, don't do it unless you know what you're doing, and even then, be cautious. Friday, I did decide to add Devo, and this time I'm going to add it by selling a put. So instead of buying it at 38, which is what it was at when I was going to buy the shares, I sold the 38 put and collected 30 cents per contract. So if this gets assigned, then instead of buying it at 38, I bought it at 37.7, or at least these 200 shares. And I want to get 257 shares, so then I just bought the other 57 shares straight, quickly. I did sell some puts on Sunstock. It's a small position. It's a $5,000 notional value because there's 20 contracts, and the most I can lose is 250, or if I had to buy the stock at 250. So that's that. And then I also did decide to buy a deep in the money call on Tesla when I saw a bullish strength coming in, and closed it within 4 minutes for $733. That was a hard 4 minutes of work, let me tell you. It was just overall a very busy week. Like, you won't normally see me put on this many trades in a week. I'm not sure what fueled this passion here. So now I'm happy to say I finally transitioned to the new spreadsheet that I made, that I shared out. And I already found a mistake. So I've already fixed it in the template, but in this hide column, it's looking at the status column to determine if you want to hide it because it's closed. If you click on that, change the W to point to the column of the close date, so that if the close date is empty, this Y doesn't come up. So just change that, paste it down, and that'll update that for you. Over here, you can now see my current positions. You can see there's a lot less stuff on because I did take a bunch of stuff off. And now I'm going to be trading with a smaller options account. Like, I'm just going to partition a small portion of my portfolio for options. I'm not going to do two separate accounts. So it's all going to be in one account, but mentally there's a smaller account for the options trades now. And right now, a lot of it's in here. Microsoft, this was one where I sold a strangle and bought a call protection. So it was a combo order. And then when Microsoft dropped, I decided to close the short Microsoft position for a decent gain. If we go back here, where is it? Why don't I see it? Oh, here it is. You see, I closed it out for $1.66, and that was $127 profit on the short call of that combo order. And then what happens is it splits up the rest of the legs into their own stuff. So it no longer appears down here. It's now up here. And I went ahead and left the long call on, thinking if Microsoft goes up, this is basically a free lottery ticket. So I made $1.50 or so off the short call. The long call is half that price. So I'm viewing this as like a call spread, that this is now like a free position. A little lotto play. We'll see what happens. Maybe Microsoft will shoot up and this would actually be worth money. We'll see. But right now, I could close it for like $30, or just leave it on and see what happens. Microsoft put here is like being tested right now. It's gone the money a couple times, but there's just so much theta left in it, or extrinsic value that can burn off, that I'm not going to touch it yet, and just going to leave it on. Even though I closed a lot of positions off, I think this one just needs to wait more. Like, just give it some time for some theta to burn off. And then Virgin Galactic, I'm still just going to roll this in the end, most likely. Down here, here's a snapshot of my portfolio at close, or a little bit after close, after market hours here, and you can see that my margin maintenance is only 40,000. But what's crazy about that is, like, up here between Nusi, Jeppy, QILD, and Devo, that's like 107 or 160K worth of stock, and yet my maintenance is so low. Like, that's the crazy benefit of like portfolio margin. And I still have a cash position over here too. That, I mean, that's being used for my options account. But it's just crazy to see how portfolio margin really enables you to leverage up if you wanted to. And I mean, if you can get to it, like, use it. uh, Projected income. Now I have some stocks to give me income, so I thought it would be interesting to add this sheet. And this is what Interactive Brokers sent me yesterday, or based off yesterday's results, or Thursday's. So projected income is to be $10,000 from dividends, and that's from those ETF funds, and then MFA, which is just probably my favorite position of all time. Like, I bought MFA at $1.11, and like the dividend itself has probably paid for itself. But I originally sold all kinds of cover calls, and like my cost basis on this, or my adjusted cost basis, is actually negative. Shoot, it might help if I let you see the number there. Thought I'd add this at the end of the video. I'm not sure if we'll do this every week or not, but I said my progress, or my account goal for 2022 was to get to 217, and that was assuming like a 15% return plus deposits. And obviously had a really good week this week. The account's up about 5%, and that just leaves $17,000 from returns from the year to get if I want to try to reach that 217. I won't start contributing until probably late February. I need to save a couple of paychecks to help pay for the taxes for last year, because I'd rather not pull money out of the account. I'll think that's very demotivating. But deposits should start late February, maybe early March, once I actually go through and calculate my taxes and figure out exactly how much I'm going to owe. But based off these numbers, the rest of the month, or like the rest of the year, all I need to do is generate $1,400 to end up reaching this original goal that I set. So that's very doable with an account size this size. And that's thanks to some very aggressive trading this week that I should not be repeating. And if you want to see why I added Devo, you can go ahead and check out this video on the left here. I go over what it is and why I ultimately decided to add it as a fourth income ETF to my portfolio. I think it's a good addition. It kind of overlaps with a couple of the other funds, but again, I think it's a good one because it has some growth value. Click on that video to learn more about Devo.